To our global CTKS family, we're grateful that you're here. All of us together make this one of the best communities on YouTube. Here, we use the world's leading indicator of price, the CTKS method, to give us X-ray vision across stocks, cryptos, Forex, commodities, and yields. So we can see what the top 1% in financial markets see before the move happens. That's a license to print money and a way to stay safe. Whilst others are panicked, we are calm. When others guess, we stack probabilities. We don't fall for hype or stories, we profit from reality. We know making just 3.5% per week is a 498% profit per year. We are the elite 1% in financial markets. Price moves in waves, so no matter if price is going up or down, please be kind to yourself, be kind to others, be dedicated and committed, and never blame. Instead, learn and grow into the best version of yourself. Let's see what the markets are doing today. A couple of days ago, we looked at Bitcoin and I drew this area out and I said there was a lot of structure in this particular area. Let's have a look into that structure and let's see how price actually paid out. Now, what we saw was quite a retracement inside the market. So I'm just going to do it like this to give you a bit of an understanding how these GWs work. They're called gravitational wells. Profiting masterclass students, just go back to week 2 and lesson 1. That's gravitational wells. A gravitational well or a GW is an area of clustered SLs or Stanfield levels that draw price back to it after. This is referring to the gravitational nature of price. Just keep in mind the GWs and structural passes and structural failures. Getting back to price action on Bitcoin, what I'm doing is just pulling this GW forward. Now you know a little bit more about it, even if you're not a profiting masterclass student. You can see between 101.795 and that 102.976, there was a very strong GW. We had also levels of structure underneath which caught and reflected price. Understanding structural passes and structural failures inside the market is really, really important, but nothing is more important than direction. To explain what's happening here in more simple terms, we saw that Bitcoin came through all of its structure, and because it had negative CTKS gaps, and they're also explained in the Profiting Masterclass, because of that we saw extreme negative downside turbulence because the VIX based and then shot up. Now, what does this mean right here? It means that the VIX retraced. Can we prove it? Looking into the VIX on a daily basis, we can see that in the past trading session, the VIX did indeed weaken and come down. That created risk on sentiment inside the crypto market. I saw some really interesting headlines today. Oh, this crypto moved because of this and this other crypto moved because of that. It's just the VIX. But this is the difference. When other people are telling themselves stories, we're just looking at the charts. We are the top 1%. What does this mean to us in the next 24 hours? Let's just drill down a little bit to a 4-hour. So what we can see here is the VIX definitely retraced. That is what we want. We want this big time, because if the VIX was to continue to spike up, crypto would have gone down quite substantially. But also the stock market would go down as well. So that we've seen right now that the VIX is weakening. It's trend changing. Now this is good, but don't expect it to just fall down, because it never does that. For example, when we look at the weakness inside the VIX, it came down and this is on the 4-hour basis, and then it spiked up and then it came down. So what you want to just keep in mind is that price is always moving in a wave, always. That's the only guaranteed thing inside financial markets. But the wave so far for crypto and the stock market is up. And these waves can get a little bit bumpy. So let's go back to here, and we saw the VIX come down, break, and do this. It's very similar to this kind of concept. So it could take a degree of time for this candle to resolve itself, but we would anticipate further negative downside action. Now that downside action will, if it comes, remember price is always moving in a wave and these markets are a little bit crazy, so you must keep in mind what is actually happening when you're inside the market. But if it does come down, and the probability is there so far, if we do get this push through in the absence of things not blowing up as they're tending to do throughout this year, our expectation, of course, is that the crypto market and the stock market, if the VIX does this, they will do that. Crypto will go up, the stock market will also go up. Looking into total crypto market cap had its own GW as well. We can see that total crypto market cap at the current time is above that GW, which was around 3.33 trillion to 3.4 trillion. It is very normal if we pass through a GW to expect retracement. Now we know that the VIX came down and it's just going up a little bit at the moment. This is the literal mirror image of what we're seeing inside the crypto market. You might remember in yesterday's video, I said the Aussie dollar looked fantastic. There was so much structural support. We expected the Aussie dollar to go up. Now that may sound really bizarre when talking about crypto, but don't forget, as the top 1%, we see things that other people don't see. The Aussie dollar gives us a lot of capability to stack probabilities, and stacking probabilities is absolutely critical. Stacking probabilities is one of the secrets to consistent profitability. That's lesson 6, week 1 of the Profiting Masterclass. Students, it's a really good idea to go back and just go through that class. At the current time, working on getting your market synchronization to the highest degree possible is really, really important. Okay, let's get back to the Aussie dollar. The more charts that you can get a signal from, a consistently reliable signal that is, the better it will be for you. So for example, the Aussie dollar does tend to throw a very good signal on Bitcoin, which is the blue line. This is on an 8-hour basis. Let's go down. Okay, here we are basically at current price, and we can see that Bitcoin and the Aussie dollar do tend to follow each other. It is not a perfect relationship, and please, just like in life, don't look for one. I'm just going to zoom out a little bit, and this is the GW that I was talking about. I was saying that there's very strong structural support on the Aussie dollar. That meant the VIX was likely to come into problems, likely to reverse, and that's what we've seen in the past 24 hours. Now, when we look at the Aussie dollar right now, I would suggest that you just keep your eye on it, especially from a structural stance. There's a couple of other signals that you should keep your eye on when we go through the cheat sheet. And these rapid cheat sheet layouts are actually shared inside the Profiting Masterclass. We've already looked at the VIX, and that we know that the VIX has actually become weaker and it's just trying to figure out if it retraces or if it goes down. And this kind of behavior, as I showed you, is quite normal. Now, one thing that I really like when I look into row 1 of the cheat sheet is the DXY. Note that the DXY is starting to form a bit of an SA. Now, a sell arc is a very important thing to look at, and also the interrelationship between Bitcoin and of course crypto and also the markets, because Bitcoin is a leading directional indicator of what the markets are doing, either strengthening or weakening in terms of risk. Now, what we've seen here is that the DXY is starting to curl over. If it actually falls, and that will happen if we start to get this kind of action, the VIX backing off, because people will pull their money out of the couch, out of the cushions, from under the bed, from inside the banks, from the sidelines, and start going risk on. So this is exactly what we want to see. If the DXY starts to fail here, that is exceptionally good. If it starts to go up, that would indicate that the VIX is starting to rally and people are buying it. Now, what do I mean by buying it? What I mean is that the DXY, in order to get that upward momentum, has to believe that the markets are going risk off. That's why we get the push into the DXY in the first place. That's an easy way to look at it. Inside row 2 of the cheat sheet, and I'll go through all of these rows just at the end of the video, we know that junk bonds has been under pressure. It's currently just retracing at the current time. Now it's trying to figure out, junk is trying to figure out if the VIX is going to spike up or it's going to give it some reprieve. Junk bonds are very important to look at because it gives us a bit of an indication inside the bond market. Now the other thing that we can see, the euro is also basing. Now this is forming what's called a biarc or a BA. Now a BA is very, very important because you can see the directionality of the crypto market, which is literally the directionality of the stock market. Now, just on that point, how can I prove that out? And well done to everybody who answered correctly in the question that I threw out on social media, which was basically a question. Does Bitcoin, what's the interrelationship, the intercorrelation between Bitcoin and the main markets? A lot of people think, I can't believe how much falsity is shared inside social media, but they believe that they're uncorrelated markets. It couldn't be further from the truth. You can see it here. S&P 500 futures. One of the things that I always suggest you do, if you hear somebody talk about something like, oh, the stock market is not related to the crypto market and they're just completely independent and they don't have anything to do with each other, just do a really quick overlay and prove it to yourself. For example, is the NASDAQ and Bitcoin intercorrelated? Do they move together? Yes, sirree, Bob, they definitely move together. What about the Russell 2000? Yeah, NASDAQ, S&P 500, and the Dow. They're all moving in directional correlation. So getting back to row 2, when I look at the euro dollar, when I look at Bitcoin, I'm looking at all of the world's markets all at once. That is how powerful Bitcoin is. And Bitcoin even moves with the bond market. It moves with Forex. Look at this close association with the Aussie dollar. The Aussie dollar, or Aussies love Bitcoin. And if you're an Aussie, please throw me an oi oi oi. Yeah, we love doing that. So what are we seeing here? And hopefully, if you're new to the community, a very warm welcome. You can see that Bitcoin, that blue line, is so undeniably important. Unfortunately, investing greats like Warren Buffett and JP Morgan and all of those people, they all turn around and say, oh, it's rat poison. Well, if this is rat poison, the Aussie dollar must be rat poison, the euro must be rat poison, the bond market must be rat poison. And of course, there's no signal between the major market indexes and Bitcoin. Or is there? Of course there is. You can see it right there. It's proved out. And please let me know, does anybody trade Forex? And what are you trading? The question is, what's happening now? Let's just go back to row 1. Don't forget, we're focused on Bitcoin. Why are we focused on Bitcoin? Because it's the commonality between all markets. Bitcoin, the crypto market, is undeniably powerful. It's far more powerful than people even understand. And hopefully you're getting a bit of a glimpse into just how good it is. Therefore, if you don't have Bitcoin in your portfolio, you're missing out on some undeniably powerful signals. Now we're getting a retracement inside the crypto market right at the moment. Why? Because of the VIX. It's really, really simple. Do we expect that retracement to turn into a full-on disaster? Well, not necessarily. All we need to do is to keep our eye on the DXY, and the way that you keep your eye on the DXY is to look at the Aussie dollar. Hang on, Ken, you're hurting my brain. Okay, the Aussie dollar is here, and yes, Bitcoin does tend to hug it. There's no question about that, just like the bond market. So if I have a look at the Aussie dollar, I'm looking at the DXY. Well, you're looking at the euro as well. You're looking at junk bonds. You need to learn to see through charts. It's wildly important to be able to see through charts. And in week 1 of the Profiting Masterclass, the barrier to consistent profitability is literally that we called into the market to buy on green, to sell on red, to buy on green, to sell on red, to buy, well, let's say I'm not buying there, I'm not buying there. Okay, I'm in, I bought the dip, oh God, I'm going to sell it. Now, I just want to explain to this, and this is a big part of the Profiting Masterclass, to understand that you're going to get emotion taxes and knowledge taxes. Forget about government tax. Government tax is optional, but emotional taxes and knowledge taxes inside the market are mandatory. If you cannot read through charts, you will suffer massive knowledge taxes, massive emotion taxes. You'll do this kind of thing over and over and over and over again, buying on the green and then selling on the red. And this kind of thing can absolutely wipe you out. Instead, you must learn and must read the market like a really good tracker. And a lot of people get called into the market to invest. They say, I'm going to invest if the price goes up. Please just drop the I am an investor, I am a trader kind of thing. You need to just delete that thinking. If you're an investor, you're probably going to end up doing this when the markets turn red, and they will. What you need is to avoid the knowledge taxes. How do you avoid a knowledge tax or an emotion tax? You actually understand what you're doing. Something that will really help you out. If you haven't done so already, just go to the homepage, ctksmethod.org. Just scroll down to this particular area, your cheat sheet to mastering price action. This is the CTKS cheat sheet. It is unbelievably powerful. The way that you can fill it in, if you do it in fine depth, or when you get good at it, you can go through it in less than 5 minutes. That's literally what the Profiting Masterclass is all about, making sure that you can go through this cheat sheet in super fast time, extracting all the value, all the benefit that is existing inside the market. And you will learn that you don't have to listen to other people's stories, just observe the charts, look through them, stack probabilities, and you can be more of a financial and emotional blessing to yourself and those you love. And also, just on the homepage, there's some other really helpful videos in here, as well as the official ticker list for the service. The official ticker list for the service does all the cheat sheet components. What I do is just make sure that I've marked up level 1 and level 2 standard certification inside the indicators for you. It saves you a tremendous amount of time. That's what the service is for. It's incredibly helpful. And there are some videos on how to use and fill out the cheat sheet and some members only stuff as well. The top 1% always thinks differently about anything that they're top 1% on. Because we know where the structure is inside the chart. We know where the gravitational wells are, the GWs. We understand how to read through the price charts. We understand so many things. It's either going to do this kind of action because the VIX, as you saw, is actually coming up, but we just use the Aussie dollar to figure out what the VIX is going to do longer term. If the Aussie is coming up, we anticipate that Bitcoin, crypto, the stock market will come up as well. If the Aussie is decaying like this, we would expect decay inside the crypto market and the stock markets. Don't forget, there's a huge difference between a natural retracement and a full-on panic, and they are, well, they literally couldn't be any more different from each other. You typically get panics around very light structure. You notice how much panic was inside the market and how little structure we had inside the market as well. People panic because there's simply no support for negative price action. It makes a lot of sense, doesn't it? Personally, in the next 24 hours, I'm keeping a very close eye on the Aussie. Please let me know inside the comments, how are you approaching the market at the current time? Okay, let's get into the cheat sheet. I'm just going to do a really quick run through for you. You can literally do it as fast as what I show you coming up. It doesn't have to take long. It can be very, very rapid, but you should do it continuously. If you found a new knowledge gem or learnt something new, please share it in the comments. We are a community of abundance, not scarcity. If you're new, we would love for you to become part of our global family. All you need to do is smash like, subscribe, press the notification bell, and comment on what time it is now. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading and investing are lifelong professions. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that making just 3% per week is a 365% return per year. We are the elite 1% in financial markets. You will create security and financial freedom in direct proportion to your willingness to learn and grow, and never blame. If you commit, your world will improve immediately. If you're going through a life pullback, our love and healing thoughts are with you. The sun will come out again. There is always hope. Be kind to yourself, be kind to others. Show gratitude and happiness, and you'll already feel richer today, and today is all we ever really have. Kate and I very much look forward to joining you again in the next video.